Hello everyone, this is Steve with the Free Bullion Investment Guide. Today is May 4th and I'm doing a review and outlook for the US dollar. This is a US dollar daily chart, and in review of last week's video I'd shown you this rather large rising wedge, it's just a rising wedge as you can clearly see. The dollar did on Monday and Tuesday fall below it. Now, oddly enough, as far as fundamentals go, traders were expecting that we had a Fed meeting statement, and Jerome Powell had a conference on Wednesday. But before Wednesday, traders were expecting the Fed to lower rates, which is why the dollar fell so much, confirming, or it didn't really confirm as far as my standards of confirming patterns go. Making a new low it isn't confirming the pattern, even though it did fall below it as expected. But if it closes the day below it, then I call the pattern confirmed. But anyways, that's just my standards. But traders were expecting, as this safe haven article states that I posted on the website on the news and commentary of the homepage of the guide on Thursday, on the 2nd. The article states from safehaven.com, Alex Kamani took excerpts from different articles, and down here he took some analysis from Xander Metals, was expecting a sell-off because the punters or traders were expecting the Fed to lower rates and confirm the weak economy. And I read that and I was like, where's the weak economy? I understand the Fed is only going to lower rates in a weak economy. That's the only reason why anybody would expect them to. And I don't understand where the weak economy is. We had a 3.2% GDP report came out last week. Durable goods are up. We have economic indicators all over the place, flashing green lights that things are getting better, as well as earnings reports from stocks from large companies are coming out better than expected. I don't understand where the disconnect is and why they would sell off the dollar. But I expected more of just a sideways movement, but traders sold it off. And when the Fed came out and said, we're just going to keep rates the same, which is what really I expected last week, it moved up higher. And then on Friday, the dollar fell back down. And that was mostly due to a euro area report that the euro inflation had accelerated. And when I first read that, I was like, well, why is inflation causing the euro to rise? Because we saw on Friday the euro to rise. This is the euro daily chart. And on Friday, the euro rose, and it didn't make a whole lot of sense to me. But then higher inflation is what the ECB wants. So if we get higher inflation out of the euro area zone, then and they want that, then they will meet their mark. And as far as traders' mentality, they will stop the QE, and it will help the euro improve. So that helped the dollar to fall. Now, as far as next week goes, there's really not a whole lot on the economic calendar. We have core CPI coming out, which may help give some direction as far as where the dollar's going. Technically, though, we still have the large rising wedge. I am going to expand it to that recent low. But we'll really have to pay attention to what happens in the news. North Korea is making new news with their missile launches, so that may hurt the dollar. We'll have to also see what happens with the trade deal between China and the U.S. That would help the dollar. And we'll also have to pay attention to the Eurozone and see what happens over there as far as their economy. economies and economic news coming out. So 96.75 currently stands as strong support, and 98.30 currently stands as strong resistance. The areas in between I will post in the description area below as far as support and resistance for the US dollar next week. And that's really it for now. So I thank you for the time. Excuse the pop-ups. Take care and God bless.